everyone. Thank you for joining us for our Market Monday this week. What a difference a week makes. Last week, we were talking about the yen carry trade and potential recessionary fears with the Fed being behind the eight ball and things were looking a bit gloomy. And now this past week, the S&P locked in its best week since last November and had one of its best 6-day rallies of the year. Now, markets tend to overreact both to the upside and downside, and that appears to be what we saw in Japan 2 weeks ago. Markets overreacted in one direction and now are recalibrating themselves back. We all know historically August and September are weaker period for stocks, but there just seems to be something about August where a lot of this out of the blue things happen. In history, August has seen Iraq invade Kuwait in 1990. We had the Asian contagion in 1997. In 1998, Russia devalued the ruble and defaulted. 2010, we had the European banking crisis. 2011, U.S. debt was downgraded. In 2015, the yuan devalued by the first 1,000-point drop in the Dow. And now in 2024, we have the yen carry trade. It appears that 2024 is setting up to be a lot similar to what we saw in 2015 with China and the yuan. Thankfully, calmer heads are coming in now, and it could be completely random, but it just seems like there's something about August that upsets the apple cart. Now, looking economically, there are a few cracks out there. I mean, we've seen unemployment trickle a little bit higher. There's been some mixed reports around the consumer. But other than that, we just finished earnings season. Earnings were very solid. Retail sales last week were knockout. Inflation starting to ease as evidenced by PPI and CPI last week. And it's all heading back to pre-pandemic levels. And now we're also on the heels of a potential Fed pivot with rate cuts starting in September. This should bode very well for the economy and be an unlock for small business and investment in small businesses, as well as the housing market, as there's been a lot of dry powder waiting for interest rates to come down. We also think the Fed has some pretty significant cushion baked in if need be with rate cuts. If you take a look at the 2-year yield and the Fed funds rate, there's about 130 basis point spread, which allows us to think there's about 125 basis points of rate cuts baked in if the Fed needs it. So what does this all mean for your portfolio? We think volatility will persist. Historically, from July to November in election years, there's been about a 25% increase in volatility. So we're probably going to be in this mode that's hypersensitive to data where good news is good news and bad news is bad news. But if you're a long-term investor, the short-term fluctuations should have no impact to your financial plan. And now looking ahead to this week, we have a jam-packed week with all eyes on the Fed. We have the Fed meeting minutes coming out on Wednesday. And then on Friday, we have Jerome Powell speaking in Jackson Hole to close out the week. So all indications of any potential rate cut coming in September will be where the market will be focused. That's it for this week. Thanks for tuning in, and we look forward to seeing you next week.